Hi, Natasha.
Hello.
Hello.
Hi.
How
Hi.
are you?
Oh, really, really well, thank you. Slightly dying under this heat, but anyway, what can you do? So let's get onto it because we are very limited on time. It's been a hugely interesting year for fintech. How has the pandemic affected both of your businesses' outlooks and your expansion plans? Shahar, let's start with you.
So I think there are really two aspects we can measure Curve from the pandemic perspective. The first one is from a product perspective that has proven to be extremely resilient. And the second one is from a team perspective, which also proved to be extremely resilient. From a product perspective, when lockdown began, the biggest concern we had is would we see churn? Would customer continue to engage with the product? Um, and how we're going to spend money? The good thing is that actually we've seen a very low reduction, very aligned with the network's impact they've seen of 20% in Europe of our customers and 30% of our customers, reduction of our customers in the UK. And this is very, very important to note because we've seen other peers, fintechs next to us, have seen reduction of up to 80% sometimes in the spend that they've seen for their customers. So we have a very resilient product, which is really, really important in this market. Customers basically transitioned their spend from a brick and mortar store to online. So decreased a bit the total transaction per user per month, but the basket size have increased for online. And the key reason we identified why it's happening is because Curve, as an OTT banking platform, is acting as a firewall from those customers from security and convenience. So they don't have to share their sensitive underlying card details with merchants they don't know. They just put a Curve card and it acts like a firewall and it gives them an immediate real-time notification when a transaction is happening. If the merchants get attacked and the hacked and some of the card details are being taken away, as usually happens, they are still safe to just lock the Curve card and get a new card number, Curve card from Curve. The second item on COVID, which was really impressive, is the team. And I'm sure many of the startups around us who are technology literate have experienced something similar, which is we're able to move very quickly from an on-site activity into an offline remote activity. And actually productivity has increased. It did brought with it some challenges. For example, many of the meetings we have right now are very transactional. We had to onboard people into the team remotely, which were very successful, but still they're missing part of the culture and the fire that people felt in the office. We're missing also a lot of activities around non-transactional information sharing. So kind of going and during the corridors and talking with each other, which is of course very important. But it's not something unique only to Curve. It's something that we as an industry and entire market need to figure out how we ensure the future of work to take advantage of the learnings we've had, this social experiment of working remotely, and into the challenges it brings with it, and also the advantages it brings with it.
So
So
Hiroki, moving over to you, is it the same kind of situation where you're all working remotely and still see a lot of demand from your clients, or is there something else going on?
Yeah, I mean, it's been an interesting year for us, obviously, as it has been for many. We work with a lot of different types of businesses, and so we've seen quite a mixed effect. So obviously, as Sahar said, moving to working remotely brings its challenges, but what's also been a challenge for us is that a lot of our business customers, are operating in industries that are physical, right? So gyms, membership organizations, and those have been affected quite meaningfully by the coronavirus. And so that definitely impacted our trading volumes as those customers have been hurting. We saw a similar kind of effect to that Shahar was saying. We saw about 15% drop in volumes almost overnight between March and April as the lockdown kicked into effect. But at the same time, we've seen a lot of the other trends that have been more positive that have benefited us at the same time. So, we've seen a record amount of demand from new customers. We saw our bookings double from Q2 to Q3, from Q1 to Q2, sorry. And that kind of momentum has stayed with us in Q3 as well. And so, we've seen a lot more demand from digital businesses as they're scaling more. We've seen a lot more demand from businesses that are taking this opportunity to rethink how they operate. Really thinking about moving to the cloud, doing some house cleaning, so to speak, as they have maybe a lull in demand. And this also, obviously, because a big part of what we help our customers to do is to manage their cash flow. And, that in an environment like this where, businesses are struggling, customers aren't coming as much, they're restricted, cash flow becomes increasingly important. And so, we're seeing a lot more focus on, how can I get paid on time? How can I improve my cash flow? And that is something that is affecting a lot of the businesses we work with.
Well, GoCardless is an expert, right, in dealing with late payments. And obviously this move to the cloud, I mean, how much of a difference can it make? Because a lot of businesses had sort of archaic practices, didn't they? They sort of were using things on spreadsheets, sending things via email. It wasn't very effective. How much of a difference does it make for a lot of businesses that have decided to make this move onto the cloud?
Yeah, I mean, this is a big part of what's driven our success, right? So a lot of the customers that we work with are exactly this kind of example that you said, where you're sending invoices via email, you're waiting for your customer to pay you. It's probably a bank transfer, but actually, if you're in the US, a lot of the time it's a paper check still. And this can create a big lag between when you're asking for the money and when you actually get it, right? And obviously it depends on the industry, but generally speaking, you'll see payments being 30, 60 days late, and that can have a big impact on the cash flow of a business. And working with our system, you can automate that whole process, right? So you can go from that manual process of asking your customer to pay you and waiting for them to send you the money, to scheduling the payment to automatically get pulled out of their bank account. And that makes a massive difference, right? We see almost an order of magnitude difference, go from 30, 60 days to maybe 3, 4, 5 days to get paid. And, that can make a big, big difference to a customer's cash flow.
Yeah.
And so, we're seeing that demand increasing, if anything, through this period as businesses are placing more emphasis and focus on getting paid on time.
I think that's absolutely crucial, because it could make the difference between life or death for a lot of businesses that are in uncertain times at the moment. Yeah. And so moving on to Shachar a little bit, I know that Curve was among the businesses directly affected by the Wirecard fallout earlier this year, one of the biggest stories in fintech. What happened, and how bad was it for you? I say this with a smile because I know you've gone through it and on the other side.
The feeling I had on the morning of the 26th of June, 9 a.m., when one of the very executive people at MasterCard Europe calls my mobile, which usually never happens, is one of the worst feelings any founder can have, which basically noting that the FCA blocked Wirecard license, and therefore MasterCard required to block all cards, all programs that operate on Wirecard. Within that, also Curve. It starts first with negotiation, trying to negotiate with them. Maybe we don't have to do that, but then it made it very clear it's not their decision, but the FCA, and they have to oblige, which makes sense. And from that moment on, we went into crisis mode. And that's one of the most extraordinary activities and experiences I've had in my career, where you see how we can mobilize a team of 270 people working completely remotely, very shortly after lockdown, about 2 months after lockdown. And our goal was to bring Curve back online as soon as possible to our customers, because we had no clarity of when and whether Wirecard will get the license back from the FCA, nor the reason why the FCA blocks Wirecard to be able to make any decision. So in the morning, about an hour after I got the call, when we realized what we can do with the leadership team, we start to formalize several streams of work, and also created a main point of contact whose job was to ensure all strands are communicating and across the weekend. Our challenge was pretty significant, and those in payments would understand how significant the challenge was. We used Wirecard for both the issuing activity. They sponsored our activity under their license, and the license the FCA blocked. And we also used Wirecard as the acquiring partner. So on a Friday morning, we had to start mobilizing issuing and principal membership with MasterCard in-house. Luckily, it's a process we've started earlier that year, and we just had to accelerate it. Just had, of course, is not gonna be merited to the amount of effort it required for MasterCard in 3 different regions, in Russia, in the UK, and the US, to be able to do so. And it also required us to identify, negotiate, sign a contract, and integrate with a new acquirer all over a weekend, which most people don't work. At the same time, we also had to bring safeguarding accounts live and ensure the FCA can confirm that those safeguarding accounts are comfortable with. So we also had to work with another bank, financial institution, who usually does not work over the weekend, to be able to spin off new safeguarding accounts to be able to operate. And really what seems to be a heroic effort of all the teams, working 60 hours straight. And a lot thanks to our partners at MasterCard, Investec, and Checkout, but also a lot thanks to our customers who over that weekend fueled us with support. And we managed to bring back Curve online in under 60 hours.
Wow.
It was a very amazing effort of crisis management, a case study for that in my view.
Yes,
and it's all thanks
like
to the team and the leadership.
Yeah, it sounds a bit like a nightmare, but it turned out okay in the end. Can I ask, obviously, this was through no fault of Curve's that this whole situation occurred, that you had thousands of customers that might not be able to use their cards. How much damage do you think the Wirecard scandal has done to the sector in general?
So first, from Curve perspective, we're not operating like usual prepaid cards, like Pocket, who were affected and impacting their customers who could not access their funds. Curve is an over-the-top layer, so the impact on customer was convenience, simplicity of use. They could still access their money, which was and is always held with their underlying bank accounts. So the impact on customers was that it was less convenient for them to make payments. The behavior was changed with using Curve, but no monetary impact. From Wirecard perspective, there's always bad actors in the market, so I would not try and generalize Wirecard impact on the market as a whole. I think what it did make as an impact is make more clarity to the regulator around how safeguarding of monies is being handled by those issuers of e-money. And I think I would expect to see probably more regulation or more guidance to relevant regulated entities around how safeguarding should happen, not only in the UK, but across Europe.
Aside from unearthing scandals, the pandemic has been a very strange time of acceleration. We're going completely cashless as businesses and consumers turn to sort of card-only transactions because they were afraid of using money during the crisis. Hiroki, let's start with your business view. What do you think having the sudden influx of behavioural data will mean for payments companies' operations?
Yeah, it's a great question. I think that there's a lot of different impacts here, right? The biggest one is the shift from offline to online. I think that is likely going to be something that, is an acceleration that stays. Even as things start to open up, people's behaviors have already shifted in quite a meaningful way. One of the things that I found really interesting is alongside that shift from offline to online, which is a bit more obvious, right? People aren't able to leave their houses as easily. A lot of physical world locations are shut down. And so, the offline to online move is quite intuitive. But the other thing that's been really interesting is that obviously we work with a lot of subscription businesses. So we look at that sector quite a lot. And, there's been a trend over the last 5 to 10 years of more and more services, more and more products being consumed in a subscription manner. What's been really interesting to see is that trend is accelerating as well. So more and more services are being consumed as subscription, but also subscription businesses are showing more resilience through this crisis as well. And so I think that, there's a real kind of positive story to tell about, the impact of those sorts of subscription models. I think that enduring relationship between customers and businesses is going to be what helps a lot of businesses get through this crisis.
Mm-hmm. Does this resonate with you, Shachar? Is this the same thinking that you have?
Yes, although from a different perspective. I think any behavioral change has direct impact on business models. Subscription is a good example Hiroki provide. Another good example is the use of credit cards. we've seen a huge decrease in the US, probably also in Europe and the UK, but significantly in the US, of use of credit cards. And the reason for that, because in the US, credit cards are predominantly being mobilized into use. The behavioral change is because of rewards from travel and rewards on luxury goods. And due to pandemic and the recession from that, luxury goods is no longer something relevant. And also social distancing means that travel is also less relevant. So the reason for use of credit cards have reduced significantly. Add to that the fact that Gen Z millennials do not like to use revolving credit cards. I think credit cards would have to revise, credit card issuers would have to revise their business models. At the same time, there's of course winners in every event. And the winners here is anyone on the move to digital. The winner are anyone who comes to digital. And I see two winners here, two big wins here. The first win is really the move towards from cashless to digital payments, cards, contactless, the likes of Google Wallet, Apple Pay, and so forth. And the second one is the movement towards rebundling. We've seen a huge increase in uptake of new products that simplify and remove friction from the way you access money across different jobs you're doing. And we believe in the next 2 years, very much thanks to the pandemic, we'll be able to see a much more significant change than we would otherwise see in those adoption of those products.
It's funny you mentioned frictionless because it's easier now than it ever has been to move money and allegiances around. Hiroki, in your opinion, will 2021 finally be the year of open banking?
I think that's a great question. I don't know whether it's going to be 2021, but I think certainly in the next 2 to 3 years, I see open banking being a much bigger part of the ecosystem. Obviously, people have been talking about open banking for a long time. It's been in the works for a long time as well, but it finally is getting to a level of maturity, and the type of experiences you can create is much better now than it was even 6 to 12 months ago. And so I do think that now is going to become a really interesting window for open banking. The UK is at the forefront of that, but there's a lot of countries that are just behind, and the level of maturity of what's possible with open banking is changing all the time. I think also, Shachar mentioned that shift away from credit cards, especially in the US. I think that's a really interesting an interesting dynamic as well, because you've always got this mix of credit and debit, and obviously open banking is by definition almost going to be more of a debit type mechanism rather than the credit one. And so I think that trend from credit to debit will also help this. So I think there's a lot of factors here, but I'm personally super excited about open banking, and we're going to be looking a lot of this space over the coming months and years.
I wanted to ask a couple of questions from the audience because we've got some very good ones here. One about the competition here. So do you think Apple Pay is a sign of more big tech initiatives to park their tanks in the banking financial services sector? I'm going to let Shachar deal with that one first.
It's a complicated, it's a very good question. It's a complicated answer, or the answer has multiple heads. The simple answer is yes, but not in the way we think. Apple, let's take Apple as an example. Apple took a very unique approach with the infrastructure they've built. Apple, probably with the power and influence they have on the market, could have chosen any approach of an infrastructure similar to Curve, yet they chose a different infrastructure which relies on Visa and MasterCard, VTS and MDES. And by doing so, the disadvantage is that they have limit restriction on the form factor. It only has to be through the Apple Pay device. It cannot be a form factor like a card, so it's limited. But the advantage of that is that Apple is creating direct relationships and agreements with each and every issuer, creating one side of the network. And that advantage is quite significant if you're looking to build your own network and relationship between consumers and merchants. And we always thought that's what Apple is intending to do. And this year, kind of all cards became open when Apple bought, I believe the company name was MobiWe from Canada, which basically allows them to create a network with merchants, similar to what Square Cash has, that allows them to make payments through Apple Pay directly from the merchant. And that basically means that now Apple has direct integration with any merchant, like PayPal or Square Cash has. And at the same time, they have integration with all the major issuers. And that by default created a new network parallel to the payment networks. And that gives Apple a lot of value and a lot of ability to create new revenues. So there is no doubt right now in anyone's mind, I believe, that the big techs are trying to come into the market. But I think people are mistaken that the big techs are trying to eat the issuers' breakfasts and replace them. In my view, it is very different. And the big techs are good at simplifying things, unifying things, making it more convenient. So it's all about removing friction from existing products and business models through the X Pays, Apple Pay, Google Pay, Samsung Pay technology and interface.
Mm-hmm. I'd like to ask the same question to Hiroki, because obviously this week we saw news about a few new entrants, a few new pivots that would directly potentially compete with GoCardless. I saw it was Klarna that was thinking about trying to do some of the things that GoCardless is really well known for. So how do you feel about the competition moving into 2021? Do you feel like it's going to get fiercer?
Yeah, look, I think that, fintech is an industry that is, maturing all of the time. There's a lot of opportunity here, and so that's going to attract competition. But at the same time, I see that as a good thing, right? Because these are massive markets, and I think the main thing to keep in mind is that when you look at the overall opportunity, what fintech is doing is still a really tiny proportion of financial services overall, right? So the more we can collectively shift customers and businesses' behavior from a more traditional mindset that would use more traditional financial services to moving towards more fintech kind of solutions, that's going to be good for everyone because it expands the market. And so the competition is always going to get more intense, but the opportunity is also going to get bigger. And so I think that it pushes all of us to work harder. But that's a good thing for everyone, I think.
Yeah, I think the best question has to be done last. In 30 seconds, because we've got exactly that time, can you both give me your top predictions for change in 2021? Shachar, let's start with you.
Wow.
No pressure.
Yeah, no pressure. Top predictions. So on the fintech side, I think we will see much more investment going into infrastructure plays, companies that focus on B2B and improving the infrastructure, which is quite legacy. I think at the same time, you will start seeing winners emerging in the fintech space, especially on the rebundling market, those who are trying to unify all your finances into one place. Many players right now trying to achieve that, each one with different tech vertical. And the next probably couple of years, we'll start seeing the key winners emerging from that competition, from that market. I took 30 seconds already.
All right, that's good. Hiroki, your turn.
I've got 10 seconds.
I think
it's. I'll say open banking. I think open banking is going to really start to take off. So I'll stick with that as my prediction.
That is brilliant. It's absolutely brilliant timing. We've run out of time. Thank you both very much. Thank you, Shachar and Hiroki. It's been brilliant.
Thanks for having us.
Bye.